Hello, lovely people, and welcome back for another technical analysis episode with me, your friend Rocky Outcrop. And happy Valentine's Day! I hope you got stacks and stacks of Valentine's Day cards from all of your secret and not so secret admirers out there. So if you're one of my admirers, don't be secret. Leave a comment down below and say how much you love me on such a wonderful day it is. So I hope you're having a great day out there, everybody. Happy Valentine's Day! And what have we got behind me here? We have the Deribit chart, and you might be wondering why I've opened up this video with Deribit behind me. That's not what I usually do. Well, the reason is because on this wonderful Valentine's Day, to celebrate how lovely you are, I thought I would give a bit of detail about how to enter the Bitcoin Deribit funded trading account giveaway that I'm running. So I'm running a giveaway here. If you've just joined the channel, then like, subscribe, all that jazz. But what this giveaway is a funded account on Deribit, which is my preferred exchange. And if you've not got an account on Deribit and you want to have one and you can't wait for the giveaway and all the rest of it, then you can use the affiliate link down below and save on your trading fees. Sort of whatever, it's up to you. So here we are, and you can see that the Bitcoin account here on Deribit has got 0.0015. That's 1.5 milli Bitcoins in there. I deposited a milli Bitcoin as a giveaway. Was the initial starting prize. But I thought it'd be much more interesting than just giving away some Bitcoin or whatever to run. Since we're talking about trading here and we focus on Bitcoin, to give away an actual funded trading Bitcoin account and have it with live, actual ongoing trades. And you can then sign in whenever you win and change the password over to yourself and trade away and do all the rest of it that you want to do there. And what's the current situation? Well, there's 120 contracts. If you've been watching the series so far, the last time you saw it, there have been 50. So I've added a bit to it, thought, why not here? And the result of those trades is that it's currently up 390% return on investment. So it's a jolly good account if you want to hit the ground running. And so how do you win it? And when will you win it? First off, how you win it is that during this video and up until the time of the giveaway, I'll be making kind of obvious movie references during the videos, and all you have to do is comment during the video or down below each particular video and let me know what the movie was that I was referring to. And provided that you're right, of course, we'll do a random selection from all of the different videos from now until the giveaway date. And if your comment selected and indeed you mentioned the movie that I was referencing in that particular video, then you win. Fantastic. And if you didn't get the movie, well, it'll go on to the next person, and somebody will, because the movie references will be rather obvious. Right. Okay, so that's the Deribit account. What we're going to talk about in today's video is, of course, Bitcoin, Ethereum, Ripple, Litecoin, Tezos, and Chainlink, but with a primary focus, of course, on Bitcoin and Ethereum, since they lead the market primarily. And then we'll check out the altcoins, because it's kind of altcoin season-y, and there's lots of positivity in the market there. But there's one other thing as well that I'll talk about, and I'll start off, I suppose, just after we roll the intros and have a wee chat to you about that. And that's this recent news here, which I'll bring up just here about the no rollbacks, Bitmex says, after 62% XRP flash crash. So if you're interested in that sort of fuddy kind of big headline news at the minute, well then, hey, stay tuned for my thoughts on that. Let's roll the intro credits. So hi, welcome back, and thanks for sticking through the intro credits. And I hope that on this lovely, wonderful day that you click like and subscribe and all that sort of jazz. But I've got this article up, and I'm just scrolling down to the bottom to see it was written by Cheech and Chong. And I think they're a little bit high when they were writing the article, because they didn't actually, because they've made a couple of little mistakes here. And it's easy to, when you're reading big inflammatory news like this sort of thing here, this headline, no rollbacks, Bitmex says, after 62% XRP flash crash. That can trip over and become FUD very quickly. So there's a lot of sort of hate in the market for Bitmex at the minute, and I just thought I would take a minute or two to sort of add a little bit of clarity to it. This channel, by the way, and all of us as Rocky Outcropticians, we're FOMO-free greed-free, grounded traders that, FUD just washes off of us like water off of a duck's back. So, right, Mark, this guy called Mark de Koning. The news is about obviously everybody that's affected by this, but one particular loud voice in the market on Twitter, especially, is this chap called Mark de Koning, Koning, who's written about how this is really not okay. My stop didn't trigger, and my entire BitMEX is now effing gone. Now, and that's a situation that results in him having lost his entire account, and a lot of other people will have also been affected by this. But you can see that there's little mistakes here when it says that minutes later the price was back up to where it was. All of this happened within a minute, and it sort of feels like that there's a negativity towards him, as you can see with this language up here, negativity towards BitMEX. And sort of this, if not a full investigation to determine how the flash crash occurred, that won't happen. I wonder if BitMEX will even respond. This is crypto in 2020. So this is how this becomes FUD, you see. Crypto, like anything else, is subject to the whims of the market, okay? And as a result of that, if somebody wants to manipulate the market, then they're very able to. Now, big accounts, big traders, and big banks, using hedge funds, managing funds and all that sort of stuff, asset managers, they need to assess the impact of their own trading activities on the market when they're performing their analysis. And that's because it's almost impossible. If you imagine, say you wanted to trade Bitcoin and you had billions of dollars and you wanted to start trading Bitcoin with your billions of dollars, that being that big whale in the market, every action you take will effectively be perceived by the small fish as manipulation because of how much of an impact your own trading will have on the market, and therefore how much of information that you're privy to, which other people aren't, as you're the one that's pushing the button which launches the rocket to the moon or down into the crypto abyss, as it may happen to be. So this is manipulation that happened in the market, and it's a result of having a low level of liquidity on the order book, which allows this situation to happen. Now, the people who would have known that would have had the most exact to the penny price information about how much they would have had to spend to make that situation happen and be profitable, of course, are BitMEX. Of course they are. They've got behind the scenes access. They can see everything that's going on that we can't see as the end user. But to just jump in and assume that it was them is a little bit kind of naive, because it wouldn't have taken a great deal of an account size on leverage to force something like this to happen, right? So what's Mark's actual problem here is that he says his stops didn't get triggered. I think that's probably quite key to understand what actually happened here. My stop didn't trigger, and my entire BitMEX account is gone. And and of course, I have a great deal of sympathy for him, because he was trading with stops, and that's of course a really clever and smart thing to do, as opposed to just allowing your account to be liquidated under what would be considered normal circumstances. But there are edge cases which I think he maybe doesn't quite understand, and Cheech hasn't really picked up on either, in explaining what went down in the market. And I don't know if anybody else out there is. I tend not to watch other YouTubers on YouTube, but I reckon there's quite a bit of FUD floating around. So hopefully we can explain what would have happened here for you. So he had stops in, and he was trading with cross leverage. So his entire, and when everybody trades with cross leverage, of course, their entire account is subject to liquidation should the prices go all the way down. A way of him avoiding that in the first place would have been using isolated margin. However, he still probably would have lost whatever margin he had dedicated towards that trade in this instance. However, anyway, you need to know if you're trading with cross that you're always running that risk. And in fact, if you win this trading account on Deribit only works with cross, so your entire account is always at risk there, and that's actually the way that I prefer to trade. It's better overall, in my opinion. Now, none of this is financial advice, I'm just a spirit guide. But so what happened here is he had stops in, and the cascade of prices going down started, and he, in fact, I think he had an order in to buy below the price at the time. The prices started cascading down the way. His order to buy triggered. So he provided some liquidity to somebody else who was actually looking to stop out just ahead of him, and added to the cascade as well, or helped stop the cascade slightly by taking a punt at a lower price. That's a divergence. That's a digression though. Anyway, he had an order in below the price. It went down there. It triggered his order, so he had a position. Then the price continued to go down, and there was not enough liquidity on the buy side at that point for him to be able to sell out of his position using a stop. So whenever his stop triggered, as did lots of other people who were also in similar boat at the time, there wasn't the liquidity on the other side of the market in those seconds in order to satisfy the order. But Bitmex will do your stop for you. So no matter where it goes at market prices, it makes it happen. So the overload feature, it's not a bug, it's a feature, kicks in, prevents new trades coming onto the market until such times as everybody's stops have been satisfied, in order to protect people's accounts. So rather than thinking of the FUD side of things and the negative side of Bitmex, it's actually a feature on their account, and I prefer exchanges which don't operate in that way, like Deribit, for instance. But it's not actually a bug that they have. Anyway, so the overload feature would have stopped anybody else from adding in new orders at the time, which would have also then contributed to the cascade of downward price action as people's stops are triggering at market price, which means that they are selling it to whoever has an order already on there at the market price, which obviously would have been going down and down and down as each one of these orders was satisfied. So there wouldn't have been any orders there wherever his stop was. Now let's just say, for instance, using arbitrary numbers, that he got in at 26 and the price went down to 25 and he had a stop at 25. Then there wasn't anything there, and there wasn't actually anything all the way down on a market order available at the time until, say, 15, 16, 17, 18 cents, whatever happens to be. And he would have been quite highly leveraged at the time. And that means that his liquidation price would have been higher than the market execution price of his stop, which is supposed to go through, which is a feature as well, not a bug. And this is why Bitmex doesn't have to roll it back, because it's technically legitimate trading on their exchange, and why the risk is with the customer. And that's something to be aware of. So so if you caught that there, his liquidation price was probably then above where the market price was at that given time when his stop order got to the front of the queue to be executed. And it will have executed then below where his liquidation price would have been for his entire account, thus wiping out his account. Ways to avoid that are to trade with isolated margin, or indeed to not actually use a stop. Now, what would have happened there is the mark price, and if you're getting all these like sort of, you'll read a lot of FUD about this and be told different stuff by different YouTubers, but the mark price exists as a way to protect people from manipulation. This here is a manipulation in the market. Now, manipulation happens and it isn't illegal, and there's nothing wrong with manipulating markets. In fact, big accounts always have to take an assessment of their own impact in the market, because a big whale, for instance, operating in a small pond, every action that they take will be considered to be manipulative from the smaller fish perspective. Now, we're smaller fish. And what do I mean by considered to be manipulative? Well, they would have prior knowledge of when they're going to hit the button, that they are going to do that. So say, for instance, Warren Buffett comes in one day and thinks to himself, I take all the money that I wasted buying Craft, and I'm going to just put that instead. If he'd have wasted all those billions of dollars buying Bitcoin with a market order, that would have shot the price of Bitcoin right up in a similar cascade to the upside as what has happened on the downside here. So that would be considered to be manipulative. But say he just wanted to buy billions and billions of dollars of Bitcoin, he isn't manipulating the market in a sort of nefarious way. It's just the result of him being a much bigger fish in a smaller pond. So manipulation is part and parcel of the game. It's actually how the market works, and it's as an underlying fundamental part of what it is to be in a free market. So that's what happened on Bitmex, and it's why they don't actually have to roll back any trades or refund people. And it's something that Mark himself, during his righteous anger on Valentine's Day, poor guy, about all this sort of stuff, hasn't really occurred to him, and it may well not occur to him, because of course 90% of traders lose money, and of the people who do trading, it's only the top 10% of intelligence people that get involved in trading in the first place. And when you consider then that 90% of them go on to lose money, it's actually a human nature issue to not really fully look at the market. And of course, if I was in Mark's position right now, I'd probably be completely fuming too, and not quite grasping what really happened to me after having just experienced that car crash, of course. But when you're able to take a step back and think about it, then you can see that what really happened is that somebody will come along, seen that the liquidity in the order books was very thin. It could have been Bitmex themselves, in which case that would be that would be nefarious and bad. But it wouldn't need to be Bitmex themselves. It could be anybody. And in fact, it's something that people do on purpose quite a lot. This is why phrases like stop hunt and liquidity hunts and stuff like that exist in the market anyway. And this is a common part of our taxonomy that we're aware of anyway. And that's just what happened. So he had a stop there. It got triggered below where his liquidation price would have been, resulting in his account being liquidated, which will have been on cross, and him losing all of his funds. And anybody who didn't have a stop there there would have been protected by the mark price, which protects against manipulation of the markets. And all markets can be manipulated at all times by people for whatever means, if it's nefarious or any purpose, whether it's nefarious or not. And to a certain extent, big players will in fact manipulate markets. So if I go over to, for instance, to Deribit right now, back to where we were looking at that trading account, and I said, for instance, that I wanted to trade on the, what were we looking at here? This is the perpetual contract on Deribit, and I wanted to trade, and I had, say, 10 million quid, right? And I wanted to trade it at roughly, say, 10x. So we're talking 100 million pounds there, or 100 million dollars, use whatever base currency you want, worth of Bitcoin that I'm going to trade. Then, so then you wanted to, you can see here on the order book, just here, that the price would move from, if I were to say buy it, right, the price would move because they would satisfy all 73,000 of those sales. It's 49,000 now, obviously it changes as I'm talking, and then all of this 7,000, that 20,000, that 51,000, we're not even getting up anywhere near a million yet. My order would push the price of Bitcoin up by more than $10 right here. Looking at that, that's only $576,000 are on the order book up to that point there. So for me to manipulate the market and push Bitcoin up in real terms on this exchange for a period of time, it would only take me $10 million, no, $50,000 traded at 10x to push it up by $10. So that's not a great deal of money. So let's just dive over to the, so I hope you get that. Let's just look at that one more time. If I wanted to push the price down here by it from 10,298 down to 10,293, how much would that cost? That would cost 886. Look, you can see there, $300,000. It costs $300,000. So at just 10x, and you can do cross, so you can do a lot more than that. At 10x, that would take $30,000 to do that, and I'd have pushed the market by more than $5 with just $30,000. Now, say if Warren Buffett did come in and say to himself, "XRP is worth too much, and I'm going to trade it on Bitmex," he would manipulate the market because his pockets are so deep. He probably loses hundreds of dollars every time he takes his car keys out. So the idea that he would trade at leverage with a big sum of money is really easy to understand. And of course, Warren Buffett isn't the only rich guy in the world. So let's just take a quick look at the chart here, and you can see that what actually happened within the space of a minute. Cheech and Chong in his article there didn't quite realize that. Is this it? Am I looking at the right exchange? Where is that wick? There it is, right. So you can see that it happened, sorry for the delay there. You can see that it happened in the space of 1 minute. You can see that it happened in the space of 1 minute right here this is the 1 minute chart. The price went down. This cascade happened. Now, Bitmex has a feature called overload. It's a feature, not a bug, and they guarantee to fill these stops and will prevent other markets coming in at orders at the time in order to prevent things getting to the front of the queue and before your stop does, so that it gets filled. And so they call it with the system being overloaded, and it's a feature, not a bug, like I say. So that caused that cascade. It all happened within a minute, and it was back up again at that price. And of course, a lot of people are disappointed by it. But anyway, I hope that kind of clears up what happened, how it happened, the time frame that it happened in, how this is absolutely a possibility in it, how you would avoid it happening to you. Of course, the way to avoid anything like this happening would be to know as well, just as on a fundamental basis, that if you're trading an asset which is as volatile as cryptocurrency, especially something like Ripple, which gets dumped and pumped all the time, then you would want to be able to sustain the market moving by a certain degree. So if this was, say, Bitcoin price, if your liquidation price was and the current price is around 10,000, and this went all the way from 30 down to 50, so let's just call it 60 something percent, whatever the article said. So if you take 60% off the price of Bitcoin, you would have to have your liquidation price being below 4,000 or so in order to not be liquidated and not have a stop and survive that process. All absolutely fine, and that's something that people generally do. Coinbase is bringing back margin trading, and they're only offering up to 3x. It's professionals don't operate in such a way that you could actually be wiped out by 60%. Mark is a professional on Twitter, professional at being an influencer. He's a professional in all those ways, but he acted very unprofessionally in his trading here in this respect, and as well his language and everything else afterwards is obviously quite unprofessional too. I'll just since I've drawn reference to the liquidation price thing, this is risking it for a biscuit here on this trading account. The liquidation price is set 9,706 on this asset, which is the June futures contract. The mark price at the minute is 11,000. It would only take a drop of a couple of $1,000s there to wipe this account out. Now, I'm aware of that, and of course, that could happen, and it could way well happen. Could happen before the giveaway happens. I'm still going to give away the account, though. Let's just hope it's in profit. And I think I've cleared everything up there, and we can come back and revisit all that sort of stuff in future videos. If you leave comments down below, if you want me to clear anything up there. I know I spoke quite quickly and it's quite in depth and it might be quite esoteric. I don't know. Sometimes I take my own sort of experience in this market for granted when it comes to explaining things. But I know that when it comes to the FUD articles that are out there on websites that you can read, that they are very much not taking any experience of the market into account when they talk about these things, because they have none and they're written primarily, I'm afraid, by amateurs. So that's why it's so confusing. That's why FUD gets created, and that's why right now you might have a bad taste in your mouth about Bitmex, when really, in actual fact, Bitmex didn't do anything wrong. It's just an asset. It's just an asset that's only been traded since the 5th of February. Where is it on the daily? So you can see here, like this is this. There's been very little time for the order books to fill up when you think about it. Compare it to some other exchanges where it just goes back and back and back. You know, it's not like that. It's only been around since the 5th of February. Mark previously as well, if you look through his Twitter feed, was getting a lot of money from trading off the volatility off the back of its having lower liquidity anyway. So he sort of should have known better, you could say. But of course, heart bleeds to them. These things can happen. Oh, and in terms of influencers on YouTube and stuff like that as well, if you're interested in this, sorry to digress for so long, but the same thing happened with Crown. If you ever watch Crown's crypto trading, I use Crown's EMAs on my chart here. I think he's a real excellent influencer, definitely a positive guy. And but he doesn't use Deribit anymore, because Deribit in a different sort of situation refused to refund customers, and it was actually, there is a slight question mark there in terms of how they performed what they did at the time. But of course as well, stops and all the rest of it are their legitimate trades, you know, and the activity happened in the market. It's legitimate. It's historical, and well, you know, it's not done in the traditional way. Cryptocurrencies are all breaking new ground, and one of the ways they're breaking new ground is in terms of the impact that manipulation and indeed the exchange's own mistakes can have on your trading account. That's one of the ways that they're making new ground here. Okay. Back to Bitcoin, back to the technical analysis. Thank you very much for sticking through me. I don't like to talk about news too much because I feel like it's a distraction from the real world. And the real world is the technicals. You can't actually trade the news. The technical, the market, the price action itself as well isn't predictive. The news is worse. It's not only is it not predictive, it's historical, and any action which has happened as a result of news is already baked into the price when it comes round to time for you to look at the price. Okay, so if you're going to choose either of these things to look at, then the technicals are definitely more predictive than news, but technicals is not predictive. It's not predictive. Trading is not about predicting where the price is going to go. It's about managing your risk. And I think the whole lecture at the start there, sorry for a lecture, it's probably an appropriate word for that, was really kind of getting at the whole idea that it's up to you to manage your own risk. And no matter what way you choose to manage the risk, there's going to be, you're managing risk. Okay, you're not managing teddy bears. So no matter how you manage it, there's going to be risk involved. And there we are. So that's that done. Now, over the last few days, we've had some volatility in the market. You can see the current price is 10,303. We've had lows of 10,093, and we've had highs of 10,320 or something like that, it says on the day. So we're actually currently operating around where is the top of the day's range right now, and you can see the wicks here in the 24-hour. And if we go down to the 4-hour chart, you can see those wicks even better. We've had quite a bit of volatility in this range here, so a lot of people have been able to take advantage of that. I certainly have been during it, and I hope that you have too. But pardon me. You might have heard about, you might be seeing also a lot of sort of like we say here, we're Rocky Outcrop. We're grounded, FOMO-free, greed-free traders. So we understand that volatility is actually a common part of the market. The volatility has never really gone away. For examples of big wicks, you just have to look over here to the 10th of February, and the 10th of February was only 4 days ago. And then there's other ones here, like for instance, the 3rd of February, where there's a huge wick on that candle. And of course, the big body candles themselves speak for themselves, like here and everywhere else. There's volatility is kind of more or less a consistent part of this market, and we're in a decent trend at the minute. So that's really what we're trying to identify anyway is the trend. And the trend is to the upside. Do we have any divergences or anything worth taking a look at the minute? Well, we had bearish divergence showing up here on the top two oscillators. That's the RSI and the stochastics here, and we actually didn't have it on the MACD down below. And we did have hidden bullish divergence as well on these oscillators. So we were saying that because the trend is to the upside, that you want to put more weight on the bullish price action, and therefore it's how it shows up on the charts and the oscillators, and than you do on the bearish stuff. We have had some bearish divergence play out to a degree, and that's enabled us to form which potentially is a higher low. Of course, that doesn't necessarily have to be the higher low, and really, again, like we say, we're grounded and we're realistic about things, and we know that the higher low could even come down in here in the 9,800 area of which wouldn't actually wipe out the derivative account, by the way, because it's on the futures contract as the spot prices we're talking here. But it would come down as far as, it could even come down as far as that. So that's where we're sort of keeping our eye out for. In the meantime as well, we have other things like the 55 moving average there on the 4 hour, and you'll see something else in here, the 10 simple is in a similar place there. And the reason why the price is coming down here overall more or less is because it's the 50% retrace. We broke through there recently, and when you do things like you get rejected off these things on the first pass, another common thing in trading is that after you break through something, you go back to retest it as support. So we broke that resistance and then we retested it as support. That's all that's really happened, and you can see the prices are in and around there, and that's more or less that summed up for that entire asset currently. If I've missed anything out and you want to know anything else in terms of how you'll be trading that at the minute, then let me know. Look in the previous videos as well if you want to see things like chat about the Bollinger Bands, and as well I talked about the measured move that you could potentially have here, not measured move, well yeah, the measured move of this wedge here, which I'd hate wedges, and I wouldn't recommend it. Wedges are reversal patterns. If there were to be a measured move down the way, it'd be to around about $800, which could take you down to here, or even down to where the 21 is on the 24-hour chart, of course. And it could also take you up as high as 618, which would fill a gap potentially, which we have in around 11,000 on the CME charts, or around about there. There's a gap. Okay, so those two things could get filled if a wedge were to break out. Wedges, of course, being reversal patterns, but they're so unreliable, it could break out to the upside. And if it were to, it would be way outside this channel, and I would expect it to come back down into it again afterwards. And if it were to break to the downside, it would still be within the channel here anyway. So basically, we can just discount the whole wedge chat anyway, because it's operating in amongst all the other more important, more manageable, easier to understand, more intelligible, and less finicky patterns. And in crypto, wedges are, in my experience, incredibly unreliable patterns. So that's Bitcoin, and let's take a look at Ethereum. Ethereum has done really well. It's come up and is hit off of our target of 274 a couple of times in the last day, and that's really nice if you've been trading in around that area. As this is, of course, I'm not a financial advisor, none of this is financial advice, and I'm not encouraging anybody to do anything with their money apart from to make sure that they don't ever lose it. I'm a spirit guide, but I've been taking advantage of this as I took some profit on the move that I got into from way back down over here. Now, that's not me showing off. That's just me talking about what we've been talking about in our videos over the last wee while, and we did say that you could get in at around the 221 level, and that happened, and that's been good. Now, why would I take profit in this area? Well, because there's the 618, and there was also this line here which I'd drawn in previously. I'd drawn this line in back many moons ago, over when the price was all over here, so it's a horizontal area of significant historical resistance, and that's was to be respected. So in this zone here, that was good. Now, in terms of looking forwards, of course, then we're looking for this to this previous resistance to act as support. So just whenever we break through this zone would be a better time for entering trades, because you'd be able to have greater ability to manage your risk, and that's what you're looking at to be a successful trader. So either we're going up here and above it, and then we could hopefully get in here around that level, or we're going to be rejected from it and come down and find another foothold of support. And basically, looking at this, there's very little between these two areas here in terms of price action historically. Of course, it could come down to sort of more or less the 250, 241 area is where I would actually be keeping my eye out for if you wanted to get some of that good old Ethereum on the 2 for 1, which I always think is funny. avoid trading off of funny numbers, just as it's not technical analysis. It's just beautiful whenever you can trade and get Ethereum at 2-for-1 price, because if you bought it around about here and the price went up to what would that be, $540, then you'd have bought it at 2-for-1, which is a good laugh. Anyway, I digress. So that's basically what we're looking at in terms of Ethereum. It's also not got any divergence to speak of currently. The recent RSI action has managed to bring the stochastics up above previous areas. Stochastics, I might have fallen on my words there, I can't remember now, but it's done the same on the RSI and the MACD. So we're not really suffering under the yoke of divergence there. And my opinion is that we could get some more upside here, which would be lovely. And the targets, of course, then become 311 or so at the top of this Fibonacci area here, where you can see historically there's been some price action. 300, of course, being a round number, would be the starting point for that. So just stick a one in there around about 300 or so. And this zone here, obviously, is your next profit taking zone, and this is your managing your risk zone. So let's just move on to Litecoin. I feel like this video is going to be far too long today. I really do apologize about that now. You'll hear the music kick in later on. They'll have about a minute or two left of the video then when the music kicks in, because that's when I'm wrapping up. And so stay tuned to the very end if you wouldn't mind. That'd be fantastic. And like and subscribe as well. Great, fantastic, great. So what have we got on Litecoin? Litecoin situation is actually more or less the same as what we've been looking at previously in terms of the retracements. And if you want to see where these retracements have been drawn in and why they've been drawn in those levels, I do tend to explain it in most videos. This one's gone on too long, so I'll not go over beaten ground already. But you can watch previous videos and you'll see me talking about why I drew them in there. Essentially, it's fine where they are. So what we've seen here is the price has come up and has come back down and is retested off of the 382 Fibonacci retracement there, and that was to be expected. That's lovely that it has done, and I'm not trading this asset at the minute, but that if I were to have been trading it, that's where I would have looked to get in and re-up on a long. And then of course this blue line up here being the target overall. There is definitely resistance in the meantime to be aware of. Of course there is, and we could look down on lower time frames and maybe see moving averages and whatnot kicking about in those areas potentially, or something like that, to give us another degree of confidence. And more confidence is always a good thing, so long as you avoid confirmation bias. But obviously where I'm hovering at the minute is sort of the intermediate area where you could see profit taking happening, and maybe that's why the price came up round about there and then came back down again beforehand. Let's move on from this asset and look at Ripple versus Bitcoin. And well, if it hasn't gone done what we thought it would be doing done overall over the last few days, that's really lovely. Look at that wick that you've got here over the 24-hour, exactly in this range here. So if you're trading the range, then great, and you can see the targets to the top and bottom side there. You've got the 200 exponential moving in here, and we want to obviously do what I've been saying so far across these other things after having been rejected on our first pass. Say that in so many videos, and that we want previous support or resistance to become support and to be able to go up there, open and close above it, and actually have possibly even have tested it, but certainly to open and close above it on a significant time frame. And let's just be clear, all time frames below 4 hours are incredibly insignificant and shouldn't be really looked at very much. 4 hours to be would definitely be your bare minimum in terms of talking about opening and closing above this line here for taking longs on the basis of there being an uptrend at the minute versus Bitcoin, which it does look to be. But just before we leave this asset, I'll go over to the 2 days so you can see how terrible it is in the longer run to trade XRP versus Bitcoin. You have to just constantly zoom out and do that constantly to get these things. Oh, look at that. That's a rubbish old retrace there. I wonder what that's about. Anyway, you have to keep zooming out to get to see. I think I put that in the wrong place. Must have moved it off the screen or something. You have to keep to be able to see how the price, I guess, versus Bitcoin goes down. But look, basically, you're always in a losing bet if you're saying XRP is going up against BTC. It just isn't. But the big areas to be aware of course, were these prices here, where it came down to and kind of double bottomed, and it's certainly looking good at the minute overall. But would I be surprised at all if it came down here and even made new lows? I wouldn't be, because it's Ripple that we're talking about here, right? This is Ripple. It's crazy. These things can happen. Let's take a look at Link. Was it clear there though? The overall, that's what we're looking for. This to turn into support on a 4 hour and then move on up. The next target would be not on the 2 day there. Would be would be where this horizontal is here. Around about that level would be your next big target that you're looking at, which is around a bunch of zeros, 3.7. That would be excellent. And if you look at the 2-day, then where does this resistance coming around? There's a bunch of zeros, 4. So there's that. And on the 12-hour, are we seeing anything? No, we wouldn't be. Sorry, the weekly. What have we got in the weekly? That's the area to be aware of. Okay, we've already done it. Pardon me. Let's go check out Link versus Bitcoin, doing really, really well, as it has been. That's great. We're in blue sky thinking territory here. We don't really know necessarily where the price could go, so instead we're looking at other things. We've got a downslope here on the MACD, so there's bearish divergence on the go on the chart there. We've got a downslope on the RSI, so there's bearish divergence there too, although maybe we're just turning that around now with this current price action. And it was consolidating sort of on the stochastics. Again, like I say, as an uptrend, so bearish looking things pay out less, but we're kind of sort of going parabolic. It's hard to know where this could end up. This is the weekly that I'm looking at the minute, and it's handy that I was on the weekly there because it gives us that information. There's less insights as you go down the time frames. You can see that there is no divergence here on the daily, so the weekly one is the one that's showing that. So at any point it could end, and we could get a sort of correction to somewhere, and any of that could be healthy. But certainly it's a positive asset at the minute, and things are looking well for it. Here over on the USD prices, we can see our retracements. And we've made it all the way up to the very top of this one here. As you can see, I drew it from the very toppity top of that price action all the way down to the bottom of this bit here. So you can see this is the retracement on the upside move, the retrace being up. And you can see that we broke through the 618, came back down, retested it. It was great for re-upping on longs if you're doing it versus the dollar. Of course, if you're doing it versus Bitcoin, there's the same story in here, but it's much harder to get an idea of where the price would be going. So, this has been a bit more helpful on that front. And you can see we come up here and we're testing it right now, and the body is below this here and the wick's gone above it. So that would have been an excellent profit taking zone in that 42 area. I don't know if I said that before, but that's obviously what we're looking at. And the next area, if we want to see if we can get this real reversal to happen and to break up above the 100%, have a 100% retrace here and go up above all-time highs. Now, ultimately though, this is a really, really, really young asset. This here is the exuberance of a new product. It's basically BS, that big wick and everything else. And we go to different exchanges, you'd have different wicks on different exchanges because it was price discovery mode at that point. Really, we're back in price discovery mode again, looking to try and figure out what this thing is actually worth. So we don't know at the minute effectively, but these would be the two targets anyway that I would be bearing in mind. Essentially $5 on that front there, and then of course whatever $5 in Bitcoin happens to be at the time in terms of targets for the Bitcoin side of things. Let's look at Tezos. It's the same story again. This Fibonacci retracement that we drew in there in yesterday's video, it was an evolutionary process as we were drawing that in. So if you wanted to see how this works, you'd have to skip to the Tezos sections in each of the videos recently. Essentially, I drew it in as it was happening, and we're looking to see whether or not this Fibonacci, which is essentially a BS Fibonacci, by the way, doesn't really work like this. Just if you were to use this as the retracement down the way, and for this Fibonacci to make any sense and to provide us with targets, it would which is not doing currently, but then the price would have to break below this 236 line here and make its way down to the 382. So until such times as that happens, we've not done that. So this Fibonacci isn't useful for retracement measuring activity, okay? But what it is useful for is on the theoretical basis of that, as this remains, it's the inverse essentially of what all of that. How you use Fibonacci is that this is an invalid Fibonacci so long as the prices remain above here, which effectively is operating as support for us currently. And we're in blue sky thinking mode, and this is something that bots, algorithms, and other people will be looking at currently. And of course, potentially there'll be other areas of confluence, of course, but you can't have historical price action as your areas of confluence for this asset because it just doesn't have the history. So that's what we're looking at the minute, and you can see that it's actually been a really effective way to be trading this over the last couple of days. If I were to be looking for any targets over the next week, well, then of course, effectively we're in the middle of this range. What we're looking to see is, can we get up here and continue the blue sky thinking, in which case this invalid Fibonacci would then once again be invalid and useless, even more so than it is now. But I like the counterintuitive usage of the Fibonacci retracement there. It's very much an edge case thing, and it's nice to be able to show off that example to people about how you could do something like that. It's very much an unusual way of doing things, and it's the specific circumstances of that chart allow us to do it, and it's a bit of fun and educational. So let's look at one versus BNB. The reason I look at one versus BNB is because one is essentially one of the carousel coins of that Binance likes to pump out on its IEOs, and it's a nonsense coin like all the rest of them are, but for some reason I like it. I've got a soft spot for it. I'll be sending it a Valentine's Day card today. Like I say as well, send me your love in the comments below. So if you're still watching here. And of course, so we're looking at this. We're looking at this Bitcoin one versus BNB because it's one of the areas where there's the most liquidity on this asset, which is why I look at it, because this is where most of the volume will be happening on this, as well, of course, against Bitcoin on the Binance exchange. But anyway, we've been coming down here, and we've come up and we've touched off the 10 simple. We kind of thought that we'd get a retracement here. This will be roughly in the middle of where that Bollinger Band was. I was looking at a few days ago. This is kind of an area, of course, which is obvious. It speaks for itself. This is one of the reasons I don't like Bollinger Bands. You've got the 21 moving average in there too, and we're looking at it daily, and you can see here that this horizontal line, as denoted by the current price action, which I'll just draw on top of, that there is the historical an area here of where potentially you've got to break through. This is the current sort of support, which could become resistance, which could become support thereafter if we were to break it. And of course, the upside of the Bollinger Bands is around the next level of support there, which is in this area here. So I'll draw in another one here. So that's what we're really looking at there. That's versus BNB. Let's look at it versus Bitcoin. More or less the same story, but you get a better set of moving averages in terms of the upside to be able to base your trades off of if you were looking to manage your risk and to take profits and whatnot. And the 200 simple is always a fantastic target. So let's put that in now around there and say, look how that lines up with all of these other areas. It's not a coincidence that that is happening right now and around these areas, and that's because that is our next target to the upside on this asset. Of course, the next target to the downside in terms of whether or not we can't actually make it above here would be because that would create this, that would make this become bearishly divergent, and we would have a double toppy type scenario, and you'd be looking at potentially getting a lower high, if something like just what now happened, if it closed down there on the cyan, we might just saw that flick. It's back at where it was before now, and then you'd get a lower low in on this, and that would be trending down away again. So then you'd be looking at support in and around on this particular pairing. Oh, do that a bit low, but whatever, in that sort of zone there would be where you'd be looking for that to kick in at. As you can see, it's happened a couple of times the last couple of days. What am I thinking on this one? I'm thinking it's actually starting to think that altcoin season is in some ways kicking off a little bit. Altcoin season is a stupid misnomer, by the way, but YOLO, whatever, fuck it. Excuse my language. So that's what we're looking at there. The altcoin season could be underway, in which case this could be going up a wee bit, and I'll be looking for those targets. But of course, nothing is set in stone. And is that everything covered? I think that is everything covered. So I'm going to now wrap up and go back over to the Bitcoin chart. This is the CME chart. You can see because it's Friday, we'll be closing here, and we want to cover the Friday close above the 50% retrace. So just point that out. And then on the last final thing, I thought I would show you the money. Hey, so so if you've heard that before, you might be interested. So anyway, show me the money. Right, let's look here and see what I wanted to show you in the last final thing before we wrap up completely for today's video. It is the golden cross, which could be coming up. So if I just change the settings here on my simple moving average and change that to a 50, it's the red dotted line, and we compare that its position to the white dotted line, which is the 200 simple moving average, you can see that these two are converging fairly rapidly during this upward trend. So so in the next wee while, little things to look out for will be whether or not these cross and give a nice confirmation of a classic, the golden cross. It is the golden cross. So finally get to mention that as being the official one, because the 55 exponential crossing over the 200 exponential is what happened back here. Isn't even a golden cross necessarily. That's a misuse of the phrase. It only applies to one thing, and it is the 50 crossing over the 200 on the simple moving averages, and that will be happening in the next few days. So that would be a good thing. Does that necessarily mean anything? Well, in fact, you could have for the upside thing. Well, it could actually mean something for the downside. After golden crosses, quite often the price action will test off of the 200, things like that. So it's something to be aware of. When crosses happen, it can hit off the 200 again, and it's just something to be aware of. It could happen, and if the wedge were to play it on the negative side, well, we never know where that could happen. It could be something to be aware of. Don't get too carried away just because a golden cross happens. But anyway, an overall trend, the upside thing, it's definitely a very, very good thing, and it spells the start of the bull market in a way that we didn't necessarily have play out during this upward trend from back in April last year. Although we did get the golden cross here, we didn't get it come down and test the market, but when the golden cross happened, the prices were here, and the prices dropped down from, what was that, 5,500 down to 4,900 or something. That's more than a 10% downside move on the days following the golden cross. So there's a word to the wise there anyway about how those things work. So you'll see a lot of sort of FOMO traders talking about that as the most fantabulous, fantastic, positive thing ever. And of course it is for the trend. So we'll be looking for a good few months of positive price action following that if it does happen. So that's everything in there. I hope you enjoyed today's video. Like, subscribe. I'm aware that it's ridiculously long compared to some of my previous videos, and I hope that it kept you entertained enough throughout it all. I'm a spirit guide, not a financial advisor. Like, subscribe, all that jazz, and enter that competition down below because I mentioned that movie phrase earlier on. Cheers. See you tomorrow.